This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end-of-day trading video for March 18th. Now, having traded for over 35 years, there are just not words to describe these markets. I wanted to start off with bonds tonight. We don't spend enough time on our bond algo on these videos. And I honestly don't understand why more traders don't get involved with bonds, either on a day trading basis or a swing trading basis. There's certainly enough vol. In our bond algo, what I love about bonds, the same thing I love about crude oil, those markets are so big they can't be manipulated the way ES and NQ are manipulated. So we're going to talk about bonds here just a minute. Now let me pull the chart back out just a little bit. You had this amazing high at 191.22. Wasn't that long ago. And one of the cool things we give you with our service that is really sophisticated, high-end institutional stuff are these algorithmic regression lines. You see this angled line. Now, I recorded a video back on the day that bonds hit 191. And this algorithmic regression line on that day was, about 168, 169. And I mentioned that in a very short period of time, you would see bonds come down and interact with this regression line. Well, I'm sure a lot of folks looked at this and saw how slowly this line is moving and thinking, well, that's not going to happen for a while. Well, it did. And it had bounced strongly and it came right back down. So let's zoom in on this a little bit. First of all, our bond algo started flipping long in here, or short, forgive me. It caught that move up, got short in here, 81. Flipped long, got short again higher, so you made money on that little long and flip back short. But the algo's been short on this little run from close to 181, 180.24-ish. Caught this move all the way down to 67. 13 big handles. 13 big handles in a couple of days. And again, I don't understand why more traders do not get involved in bonds. I mean, most traders that I know trade ES, and that's great. We trade it too. Trade the tar out of it. Over 300 today, and I'll show you the evidence of that in a minute. But I don't understand why more traders don't trade bonds. I believe quite simply that we have the best bond trading algo outside of an institution, and I find it real hard to believe that institutions have anything better than this either. So short in here a couple of days ago, above 180, all the way down. Now, notice how quickly it came down and tagged this algo regression line. Now, what you had today, I mean, I don't know what you would call this pattern. It looks like a wishbone. But as crazy as the moves were, it traded by the numbers. It came down into our Mercury band, came right back up. This was yesterday's X5 pivot, and that is purely an institutional time price pivot. Broke it, and you can see how precisely, and in fact, let's take the chart back just a little bit more again. This was the bull bear pivot from yesterday, 179.25. Notice that the algo, which is the lines flowing through this, the curved lines, the algo gets short in here above 180. You have a fast move down to 178. Notice where it went back to, and I've said this on videos before, I'm going to say it again. I can show you evidence all throughout the day that these are the exact same time price algorithms the big institutions use, and here's why. Let's say you and I and everybody we know decided we were going to short bonds when it bounced back up here to this daily algo bull bear pivot that was put out yesterday morning, about 8 o'clock. All right. If you and I and everybody we've ever met in our entire lives pooled our money, we could not stop bonds on a dime like that. Only the institutions can. And so yesterday's daily bull bear pivot, which came out about 8 o'clock, Several hours later, it stops on a dime, and then boom, the institutions were ready to sell the tar out of bonds right here. And you would have known that if you were one of our members. We hope you check out our service at mercurysignals.com. But look, I mean, here's the point. Look at how precisely you have price come up and fail at yesterday's daily bull bear pivot. Comes right down to the tick to our Mercury band. These are done over the weekend. We don't update these Mercury bands on bonds during the week because they don't need to be. They're done once on the weekend. Now, the Mercury bands on our ES, that gets updated every night. But again, same thing in reverse. If you and I and everybody we've ever met in our lives pulled all our money together, we could not get bonds to stop on a dime like that after a move from 79 down to 67, 12 big handles. Then you get this move back up that fails again at today's institutional algo pivot, comes down and tests right back up to today's daily bull bear pivot again. You can't have all of these moves that stop on a dime at a particular price. Only the institutions can do that. And these are the same metrics they use. We make them available to individual traders, but this is the same stuff the individuals use. I mean, look, you want to follow the elephants around and do what the elephants do? We give you that information. You come down again and stop directly at another Mercury band, to the tick. You come back up and again, to the tick, stop at the algo regression line. I mean, what system available for consumers does this? None. Now, here's the larger picture. What are bonds telling you? Bonds are telling you that there's very bad problems in the system. Now, the ECB came out this evening. They're pumping 750 billion euro into the system. Now, what happens? Let's flip over here to our ES chart. So you had this move down here to 2262. Mercury band extension at 2270. Now that is tonight's extension, but we had metrics that caused us to get long the end of the day. And where do we get long? 2311. And what we do is we trade in thirds. So we very quickly take our first piece out, a little under 7 handles. Then we look for a place to take the middle third of profit, 38, and 61 on the runner, in at 2311. And this was right before the end of the day. 105 handles. All right, now here's the total for the day. Let's go back, beginning of the day today. Tell me if there's another trading service available for individual traders that does this. First trade in the morning, plus 43. Next one, 25. Next one, 43. Next one, 27. Last one, 105. And then in this evening, you had that crazy move up, almost 200 handles off the afternoon low. And we shorted it at 52. Took 5.5 handles from the first piece. I'm sorry, 4 on the first piece, 5 on the middle. Short at 52, 24.52, out at 24.15. That's another 46. So you add it all up, it's over 300 on the day. Now look, you know the drill. Past performance is not in any way guarantee of future results. But I mean, we did over 200 yesterday. I believe we did like 150 on Monday. And I may have that in reverse. But you know, you're talking what, 600 handles in 3 trading days on ES alone. Not to mention what our bond algo does. Not to mention what our crude algo does. And yes, we have had institutions that wanted to buy this bond algo, and they're not getting it. Why did we short this move at 52? Well, look, you can zoom in on this. We got a Mercury band right here at 51. We had another one up here at 66. Now, it didn't make it up to the 66, but it failed here at this Mercury band at 24.51. And so we shorted it. Now, where did it stop? It came down, right down to our algo pivot at 23.93, came back up and failed at this pivot at 25, and now it's back down again. So, look, these markets look random. They're not random. They're trading exactly by the numbers. You just have to have the same numbers that the institutions have. I can tell you every single day where the zones are that the institutional algos will buy and sell. Every single day we provide that. So, you know, these are the kind of results. And it's all posted in real time. Now, let me clarify that. We've got a live chart where these trades are called out in real time. So there are times when the market is moving that it may be half an hour later before we post it in the timeline. But every one of these trades that you see was called out to our subscribers on our live chart in real time. Well, if you haven't seen our videos before, what's a live chart? Well, you're looking at it. So for our subscribers, they get access to our ES systems. This is our day trading system here. This is our swing trading system here. You see the algos flowing through the charts. These fixed horizontal points are algorithmic pivots. These are the same pivots that the institutions trade on. And if they weren't, then price wouldn't stop to the tick at these things all day long. And I want to show you one other thing. Yesterday, see this purple line? This is an institutional algo pivot. Came up and failed big time 3 times. 1, right there. 2, right there. 3, right there. So this is like having a roadmap to what the institutions are doing and when they're doing it. And they have a whole lot more money than you and I will ever have in a bazillion lifetimes. All we have to do is follow their tracks. And we give this to you every single day. So as scary as these markets are, markets like this are incredibly profitable when you have these types of guidelines to go by. Let's take a look at crude. And again, if you haven't been to our website, it's mercurysignals.com. What's cool about our service is you get the ES/NQ service, if you like trading ES, the equity indexes, and you also get our bonds and crude oil system, and it's all one price. So you have a live chart, and we run this on Zoom. So all you need is an email address, free Zoom account. We give you a code for the ES index trading service, and we give you a separate code for the live chart for bonds and crude oil. So on bonds, here you have 2 charts of ES, day trading and swing trading, and then for our bond NQ or bond crude oil, you got bonds on one side, you got crude on the other. So all you need is 2 different email addresses, and you go to Zoom, you put the code in each day, you see these for free, and I'm on the mic all day long, calling out the trades, the setups, walking you through, and look, you know, we get in the trade, we take our first piece out, we take our middle, and then we trail a stop. So you can see how we trail these stops, and every one of these is called out on the mic, and they're posted on Zoom. So we tell you where to trail the stop, take the guesswork out of all this. But before we wrap tonight's video, let's take a look at crude. And here too, there are periods in these moves down where the algo has gotten, you know, long briefly, book some profit, and then it'll get short at a higher price. But this last move, I mean, this goes back to 29. right in here, 29, call it 29.80-ish, all the way down. And then it got long right in here about 22. And so, you know, it will, when it gets stretched, it will flip and it'll catch some of this move, and it's right on the cusp of shorting again. Right now it's still long in here. But the great thing about our service is that even if you don't trade bonds or crude oil, it is super important to have these on your screen so that you can trade ES better. It's as simple as that. We give you both of these services for the price of one. These used to be two separate subscriptions, and right now we give them both to you, the ES service and the separate bonds and crude. It's all together, it's one price. So if you haven't been to our website, just punch in mercurysignals.com. That will take you to our website, which looks like this. You can check out information about the ES and Q algos, the bonds and crude oil. And if you do nothing else, take a look at the weekly reports. You know, the people that are on the financial news channels, and I'm not talking about the people that work for CNBC and Bloomberg. They've got some fantastic people that work there. I'm talking about some of the knuckleheads that come on as guests that are touting this or touting that. You know, the same folks that told you a month and a half ago, V-shaped recovery in Asia regarding coronavirus. Bye, bye, bye. Oh, okay. Whatever. Go into the weekly reports and go down here. And we try and, even though this is heavy material, we try and lighten it up a little bit. You got the robot from Lost in Space. And that article is "This Does Not Compute." We had the mean kitty, and the article here was mean reversion. So back on February 15th, you were trading 3 standard deviations above the 200-day moving average. And the question was this: look, math is math. We were going to get mean reversion. The question is, was there going to be no mean reversion, gradual mean reversion, or violent mean reversion? At the same time, people on TV were telling you, buy the dip, buy the dip, buy the dip. And go back and look at these articles. I guarantee you there is nobody who is this accurate this early in January and February about what we were going to see. Why? Because these weren't predictions. They were based on math. Math is truth. You can have people that were perma bulls forever, okay, and they were right for a long time. We trade both sides of the market, long and short. Annoying pop-up. And by the way, if you want these videos delivered directly to your inbox each day, that's what those pop-ups are for. But go back and look at this. Calm Before the Storm, published February 8th. Dangerous Cycles, published February 1st. All About the Math, published January 25th. And by the way, we don't just talk the talk. Go back and look at the chart. January 22nd, short off the open. January 24th, short off the open. January 29th, short off the open. January 30th in Globex at 32.95, short. But go back and look at these articles. And these told you what the math was telling us all the way back into January. So we give you a ton of value for a very reasonable price. You're getting 2 trading services for the price of 1. Lifetime rate lock. We only bill 2 weeks at a time, so if you don't like it, you're not even paying for a month in advance. So that's going to be a wrap for tonight's video. We hope that you'll try out our trading service. You will not find anything like this. These are the institutional algorithms. There is going to be a rate increase coming up very soon. It was scheduled for April 1st. We're getting to the point where we need to start limiting capacity, so there may be a rate increase before that. But in any event, whatever rate you subscribe at is locked in for life. It doesn't matter what the rates go up to after that. So if you have any questions, you can reach me at markanthony at mercurysignals.com, Mark Anthony at mercurysignals.com. We thank you so much for taking the time. We wish you well. We hope everybody is safe and healthy in your home. But we really thank you for taking the time to view this tonight. And as always, God bless you. God bless your family, and we hope to see you again soon.